Assalamualaikum everyone. So today our group will present about audit of non-current asset. As you can see, this is the table of contents. Before I start, my name is Nur Ain Umira binti Zainuddin and my number matric F1110. So what is non-current asset? Non-current assets are long-term assets owned by a business that are used to support the company's operation and are expected to be used for more than one financial year. These assets are not purchased for resale, but to help the business generate future economic benefits. And next, I will explain about the objective of non-current assets. So the first objective is to ensure that non-current assets are properly authorized, recorded, and also classified in the financial statements. This is to make sure that the assets information is recorded correctly. The second objective is to verify that the non-current assets exist, belong to the company, and are supported by appropriate documentation. This helps confirm that the assets are genuine and owned by the company. And the third objective is to ensure that the assets are accurately valued, depreciated correctly, and presented according to the applicable accounting standards. This ensures that the asset values shown in the financial statement are accurate. So this objective help the auditor provide reliable financial information. And next, I will explain the characteristics and example of non-current assets. The first characteristic is that they are used in business operations, such as carrying out the company's daily activities. The second characteristic is that they have a useful life of more than 1 year, which means that they are long-term assets. The third one is they are not intended for resale because they are purchased to support the business. Another characteristic is that they provide future economic benefits by helping the company generate income over time. And lastly, most non-current assets are depreciated except land. Why? Because their value decreases as they are used. So for the example, such as building and vehicle. The building is used as the company's operation premise, while the vehicle is used for the transportation and operational activities. So now I will pass to the next presenter.
Hi, my name is Nur Shazalisa binti Anwar Azhar and my number matric is 063822F2010. Introduction, Acquisition. Definition: audit acquisition are representation made by recording the recognition, measurement, presentation, and disclose of item in the financial statement. Purpose acquisition: first, help auditor evaluate financial statement, obtain sufficient and appropriate audit evidence. Type of acquisition: first, exemptions, competence, right and obligation, valuation and allocation, occurrence, accuracy, cut-off, and presentation and disclose. Transaction flow for vehicle acquisition. Step 1. Identify need for vehicle. The process starts when a specific department identifies the operation need for a new vehicle. Step 2. Prepare purchase requisition. An internal formal request is drafted by the user department and signed off by the department head and officially request the asset. Step 3. Management approval. The request undergoes strict financial scrutiny. A finance manager or director must approve it to ensure budget availability and justification before spending company funds. Step 4. Issue purchase order to supplier. Once authorized, the purchasing department creates an external purchase order and sends it to the vehicle supplier, legally ordering the asset based on approved term. Step 5. Vehicle delivery and inspected. Upon physical arrive, The receiving team inspect the vehicle to confirm it matches the specification, model and condition ordered. Step 6. Supplier invoice received and verified. The billing invoice arrived for the car dealer. The account payable team verified it via a three-way match, matching the purchase requisition, order, the delivery order, and the invoice to catch any billing discrepancies. Step 7. Record vehicle as non-current asset. The accountant officially capitalized the vehicle on the balance sheet under property, plant and equipment and prepare it for the future depreciation tracking. Step 8. Payment made to supplier. The Treasury or Finance Department release the final payment check or bank to the supplier, successfully ending the transaction. For supporting document for vehicle, internal request or purchase requisition form, proof that the acquisition originated legitimately from a department that currently need it and had initial head of department banking. For purchase order, the official external contract confirming the exact price, specification and term authorized by management for the supplier. Delivery and billing document, delivery order, a document provided by the supplier or dealer, open transit, signed by the company receiving department. It as physical proof that the vehicle was successfully delivered and accepted. For supplier invoice, the final bill detailing the exact amount of registration fees and tax charge. This serves as the primary source document for journal entry. Payment document or check. The final proof of cash disbursement demonstration and the financial obligation to the supplier was settled accurately and through approved channel.
Assalamualaikum and selamat sejahtera para rahayu. My name is Nur Hidayah binti Muzairi and my matrix number is F1094. So, on this slide I will explain about auditization for vehicle. So, we have test of control, we have subventing test and audit procedure. So, the first one is occurrence. Verify management approval before purchasing new motor vehicles. Inspect the purchase invoice, vehicle registration and FAR to confirm to the purchase occurred. And the last one is inspect the purchase order, supplier invoice, payment voucher, JPG registrations and FAR to verify the genuine and properly recorded. For example, the company bought a new Toyota Hilux on 15 March 2025. The auditor checks the purchase invoice to confirm the purchase really happened. Next, number 2 is accuracy. Review periodic reconciliations between the fixed asset register, that's its FAR, and general ledger. Next one is recalculate depreciations and compare carry amount with the FAR and general ledger. The last one is inspect the FAR depreciation schedule and general ledger to verify depreciations, expend and carry amount accurately recorded. For example, the company record annual depreciation of 8,000. The auditor recalculate depreciation to ensure the amount is correct. On this slide, I will explain cut-off and presentation and disclosure. For cut-off, the auditor review procedure for recording vehicle acquisitions and disposal near year end. And the next one is check vehicle additions and disposals before and after year end for correct cut-off. The last one is inspect FAR, disposal document, purchase invoice and general ledger to ensure vehicle transactions are recorded in the correct accounting period. For example, is a vehicle purchased on 30 December to 2025 should be recorded in the 2025 financial year, not 2026. Next one is presentation and disclosure. Auditor will review management checklist for financial statement disclosure. Auditor will verify the vehicle and related depreciation are properly classified and disclosed. The next one is inspect the financial statement, depreciation schedule and FAR to ensure vehicle information are depreciation are properly present and disclosed. For example, the company present motor vehicle under property, plant and equipment. This called PPE and disclose the depreciation method in the financial statement. On this slide, I will explain existence and completeness. For existence, the auditor will review periodic physical verification of vehicles and physically inspect the asset and trace to FAR. And the last one, inspect the vehicle, FAR, vehicle registration card and general ledger. For example, the auditor physically inspect a company van and match its registration number with the fixed asset register. Number 6 is completeness. Review periodic reconciliation to the FAR with the general ledger and compare the FAR with the general ledger to identify any omitted vehicles and inspect the FAR depreciation schedules and general ledger to ensure all vehicle and related depreciations are recorded. For example, the company purchased 3 vehicles during the year. The auditor checks that all 3 are recorded in the fixed asset register. On this slide, I will explain right and obligations and value and allocation. For right and obligations, the auditor will review management's approval of depreciation calculation and asset reviews. The next one, the auditor recalculate depreciations and verify the carry amount. And the last one is inspect the depreciation schedules, FAR and general ledger to ensure depreciations and carrying value are correct. For example, the auditor checks the JPJ registration card to confirm the vehicle is registered under the company names. Last but not least, valuation and allocations. The auditor will review management's control over maintaining vehicle ownership records. For the next one, verify the vehicle in the FAR against the vehicle registration card. And the last one, the auditor inspect the JPJ vehicle registration card, FAR, and general ledger to confirm the company owns the vehicles. For example, a vehicle costing 100,000 is depreciated over 5 years. The auditor checks the carry value is calculated correctly after depreciation. That's all from me.
Alright, my name is Daniel Zain Azim Ben Rissam. My metric number is 06-34F10S. Now I would like to continue with the next an example of non-current asset, which is building. Alright, now I will continue with transaction flowchart for the acquisition of a building. Let's begin with the first step, which is need to purchase building. Actually, in this part, the company must first identify the needed to purchase a building, whether it's want to buy or not. If the company want to buy or own the building, the company need to provide or prepare a purchase requisition document as an official document to apply the purchase. Next, the second step is management approval. After the company prepare the purchase acquisition document, the document will be sent to the management for approval. So here, a document approval form is required as a proof of management approval. For the board resolution document, it is document that you needed to approve the purchase of asset that have the high values, which is in this case we want to buy buildings. Next is procurement department. After receiving approval, the procurement department will begin the process of obtaining a supplier or the developer. So the company need to prepare document of RFQ, request for quotation, and the document will given to the supplier. So what is RFQ? RFQ is actually the document or letter that you ask the supplier or developer about the price, the specification, and others. After that, the supplier will send a response with document quotation, which is have everything that you ask in RFQ document. So The company will choose the supplier or developer who provide the best quotation. And then the purchase order document will be issued to that supplier to confirm the agreement to purchase the building. Step 4 is seller developer. After the purchase order was received by supplier, the supplier will be issued the sale invoice document as a sale bill. At the same time, both party, which is the company and the supplier or the owner of the building, need to sign the SPA document, which is sale purchase agreement, as an official building purchase agreement. All right, next step 5, which is building handover. When the building is ready to be handed over by the company, we or the company will receive a delivery order or handover certificate document as a proof of handover of the building. It is sent with the vacant possession letter. For the title deed document, it was needed if you want to transfer the ownership from the old ownership to the new ownership. And then next is step 6, which is finance department. In this situation, the finance department of the company will initiate the payment process to the supplier. So the document was using here is the payment voucher. And then the company will pay by using a check or bank transfer as proof of payment happened. And then the office receipt will be issued. Step 7, account department. After the purchase of the building was completed, the account department will record all transactions that occur through general voucher to general ledger and finally to the fixed asset register as the company fixed asset. So actually in this part, the building was already become the property of the company. Second last is year end. During the year end of that year, the company must provide a depreciation schedule to record all depreciation of the building. And lastly, in financial statement, the all transaction that happened that occur in that year must be stated or recorded in financial statement as evident valid purchase. All right, this is an example of supporting document that involves in building project. I think that's all for me. Now I'd like to pass to the next presenter.
Thank you. Now I'm going to continue with the audit assertions for acquiring building. So first we have occurrence. Occurrence is important to the auditor to determine that the purchase of the building occurred during the accounting period with genuine transactions. The accounting exists for building in the documents. So first we have test of control. For the test of control, the auditor requires to verify that management's approval for the purchasing of building. And second, we have substantive test. For the substantive test, the auditor traces the recorded purchases to supporting documents. And for the audit procedure, the auditor inspects the purchase agreement, invoices, and payment records to confirm that the purchase occurred for the building. And next, we have accuracy. For accuracy, the importance of accuracy is to determine whether each amount and transactions were recorded precisely without any omission or misstatement. So, for the test of control, the auditor reviewed the accuracy of recording building acquisition. And for the substantive test, the auditor recalculate the purchase cost and expenses related to purchasing the building. And finally, for the audit procedure, the auditor will inspect the invoices, purchase agreement, and general ledger to ensure that the building is recorded at the correct amount without any omissions or misstatements. Next, I'm going to continue with the next audit assertions, that is cut off. Cut off is important to determine whether the asset is acquired during the correct accounting period. For example, if the building is purchased on current accounting period, the building should be recorded as purchased in the current accounting period, not as previous or the next year. So for the test of control, the auditor review the procedures for recording purchases in the correct accounting period. And for the substantive test, the auditor will check transactions recorded before and after the year end to determine whether the date is correct. And for the audit procedure, the auditor will compare the invoice date title transfer date, and general ledger to ensure that the building is recorded at correct accounting period. And next, we have presentation and disclosure. Presentation and disclosure is important to see whether the building is recorded as correctly as it should be. So for the test of control, the auditor will review management's financial statements recording process. And for the substantive test, the auditor will check that the building is properly classified and disclosed. So, like there is no omissions or misstatements. And finally, for the audit procedure, the auditor will inspect the financial statement and notes to the accounts to ensure that the building is recorded as PPE, that is plant, property and equipment, and disclosures are comply with applicable accounting standards. For examples, accounting standards that can be used by the auditor is MFRS, like that. The next audit assertion is existent. Existent is to determine whether the building is actually exist physically and throughout the document. So for the existence, the auditor will review periodic physical verification of buildings by management. And for the substantive test, the auditor will physically inspect the building and trace it to the fixed asset register, FAR. This is important to the auditor to determine whether the building is actually exist physically. And next, for the audit procedure, the auditor will inspect the building like physically, fixed asset register to search whether throughout the document whether the building actually exists for the company, and the title deed and general ledger to confirm that the building existed in recordings. And next, we have completeness. Completeness audit assertion is to determine whether all the recordings were recorded completely, not left out. Like any misstatements, it is not intentionally, but it also can be without intention, like any mistakes by without any intention. So for the completeness, the auditor will verify management's approval for building purchases and trace the physical building and the fixed asset register to see whether the building is exist and the documents are complete for the recordings. And finally, for the audit procedure, the auditor will inspect the fixed asset register, title deed and purchase invoice, and general ledger to confirm all buildings are recorded completely, like each and every information is recorded completely without anything being left out. The next audit assertion is rights and obligation. The auditor must ensure the rights and obligations of company towards the building to determine whether the company actually owns the building. So, for the test of control, the auditor will verify that ownership documents are maintained and reviewed properly. And for the substantive test, the auditor will match the title deed with the building recorded in fixed asset register, whether that the building is acquired under the company's name. And for the audit procedure, the auditor will inspect the title deed, fixed asset register, and general ledger to confirm the company owns the building. And next, the last one is valuation and allocation. Valuation and allocation is one of important audit assertions for testing the building, as it should be recorded in its proper value. Like the building, it should be recorded in its proper value without any misstatements. For the test of control, the auditor required to review approval of the recorded building cost. And for the substantive test, the auditor verify the purchases and recalculate depreciation if it is applicable. But as we are talking, I'm briefing you about the building that purchased in current period. If the building were purchased before the company already acquired the building will have depreciation and it will decrease the value of the building. But as I'm talking about the building that acquired freshly, the new building, even though it will have depreciation for the period, for the current period, it will not depreciate much more, like it will take for a long 1 year period. And for the audit procedure, the auditor should inspect the invoice and purchase agreement, depreciation schedule and fixed asset register and general ledger to ensure that the building is recorded at the correct carrying amount. Carrying amount is the value of the building. And that's all from me. Thank you.
And lastly, as a conclusion, non-current assets are important because they support the company's daily operations and also provide long-term benefits. Therefore, auditors need to ensure that these assets are properly recorded, accurately valued, and also supported by sufficient evidence so that the financial statements are reliable and can be trusted. Thank you. That's all from us.